this is our episode series. We are going to go through a strategy that you can utilize to trade boom and crash, and just have an idea how boom and crash operate and see if it's an instrument or these are instruments that you are willing to fit into your trading journey. Right. So this is the plan. The first episode is going to be an overview of the strategy. The second episode is going to be price action tools that we are going to learn, that you are going to utilize to find entries and to find exits, right? And then the third episode, we intend to take you through higher time frame analysis. This is going to involve being able to identify old highs and old lows, being able to identify trending markets, and being able to identify consolidating markets. And then for episode 4, we intend to tackle lower time frame analysis. This is where now we are going to look at liquidity. We are going to frame entries and exits, and we are going to identify spikes, how to trade spikes, and how to trade drops, right? And then we have a surprise video for everyone. We will announce as the series continues, right? So first things first, who is capital trading and why are we here? Capital trading is a community of classy traders with an end goal of effortless trading. Our mission here is just to enlighten people on the importance of investing into financial markets and just be able to identify its potential returns, right? So that's all we are here for. It's a group. You will get to know who exactly is capital trading as time goes. You'll be able to identify who is involved, all the stakeholders who are involved. Just make sure to keep in touch with us and just follow our social media platforms. Why are we here? Or what is boom and crash capitalizer? So I'm going to walk you through what this is all about. But before we do that, go through our social medias. We have a YouTube channel. It's called Capital Trades, at Capital Trades. So this whole series will be uploaded on this channel. Not just this series, we have more content coming. We'll be sharing a few nuggets, tips, stuff that you can utilize to improve your trading and your trading journey. And then we have an Instagram channel, Capital Trading BW, right? And then with an underscore. We have our Facebook page, Capital Trading BW, our Twitter account, Capital Trader 23. This is where we are going to break down all the conspiracy theories, and that's where the gossip will be happening. And then we have a TikTok account, Capital Trading BW. This is where we showcase lifestyle, just eye candy stuff. So now let's continue. What exactly motivated this strategy, right? So the reason why we started, we wanted and we decided that we are going to share the strategy with you is because boom and crash basically is perceived as a holy grail instrument, but in actual fact it's the simplest of all the synthetics, right? We'll dive into what exactly are synthetics later. And then we have been trying and testing this strategy for over a year now. We took losses, we had wins. Now we managed to identify the strategy, and we have realized that it's highly effective. And then boom and crash capitalizer basically BCC in short, is ideal for growing small accounts into big accounts. But who exactly inspired this strategy? This is the inner circle trader, basically the engineer and creator of smart money concepts. That's what he calls himself, and he's living up to his name, or he's living up to that. And he teaches a more algorithmic mode of approaching the market. He has a YouTube channel. Go check it out. There's just more content that you can utilize as a trader, right? Just go on YouTube and search the inner circle trader, or just ICT. So now let's jump into the outcomes of this strategy. At the end of this whole series, traders should be able to understand the nature of boom and crash. Traders will be able to utilize price action to find entries, exits, and be able to trade spikes and the drops from boom and crash. Traders also will grow small accounts. They'll be able to mitigate losses. And then another outcome is we have something we have something in store, or we have a surprise video where we'll be turning $40 into $200 using BCC. We have not decided whether it should be a single video or a single episode, but we will definitely give you a heads up immediately when we drop this video, right? Now, what exactly is a boom index and what is a crash index? Let's jump into what these instruments are. Boom and crash are synthetic indices that are found under deriv.com platform. So a synthetic index is these are unique indices that mimic real world market movement, but with a twist. They are not affected by real world events at all, right? So boom indices contain three sub indices, which is boom 300 and boom 500, lastly boom 1000. It's the same thing for crash 300, crash 500, and crash 1000. These synthetic indices, they are not affected by world events at all. Fundamentals, just like in the foreign exchange markets where economic events can affect the movement or the price movement. So these instruments, they are not like that. It's just a random numbers computerized by an algorithm that is owned by Deriv broker only, right? That's the long and short of the definition of the boom and crash synthetic indices. Now, boom 1000, boom 500, and boom 300 indices, there is an average of one spike in the price series that occurs at any time within 1000, boom 300, and boom 500 ticks, right? So a tick denotes a market's smallest possible price movement to the right of the decimal. In plain terms, all I'm saying is each increment in the digit of a price is a tick, right? So if you look at the picture on the screen, you realize that the green candles, those are small ticks. that form in this time frame, it's a 1 minute time frame. They form every 1 minute, right? And then the white candles, they represent the spikes that can occur at any time within 1000. If it's boom 1000 ticks, up to 500, boom 500, then 300 ticks respectively, right? And then the same thing for for crash indices, crash 1000, crash 500, and crash 3000 index. There is an average of one drop in this price series that occur at any time within 1500 and 300 ticks respectively. You look at the chart, instead of spiking up with the crash indices, they drop on the downside, right? So these drops can occur at any time per within 1000 ticks if it's crash 1000 and for other instruments respectively. Now let's jump into the strength of boom indices. When we talk of strength, this is what we mean. From these three boom indices, which one is the strongest, or which one is more volatile, right? That's what we mean. Boom 500 is the weakest of them all. If we open the same amount of volume, you'll realize it gives less returns than boom 500 and boom boom 1000 and boom 300. And then boom 300 is the strongest of them all. It means if we open the same volume, we are going to get more returns or more losses than the other two boom instruments, right? And then boom 1000 is the average of the three. So we jump into the strength of the crash indices. Crash 500 is the weakest of them all, followed by crash 1000, and the strongest of the crash indices, which is crash 300. I'm going to jump into the volume or lot sizes for the boom 1000, boom 300, and boom 500 indices. So for boom 300, remember that we said is the strongest of them all. This is why from the three is the most, its minimum lot size is 0.1, while for the other two the minimum lot size you can execute is 0.2. Then the maximum lot size for all three of these is 50. Maximum lot is 50, right? And then we look at the lot size for crash indices. Crash 300, the smallest lot size is 0.1, and then the maximum 50. And then for crash 500 and 1000, minimum lot size is 0.2, and then the maximum is 50. So if you start trading, you need to keep the slot sizes in mind so that you don't find yourself making hasty decisions or mistakes when opening the volume or when opening positions, right? So this is it. You should have an idea of what boom and crash is all about. You should have an idea of why does it exist. So on our next episode, we will be tackling price action tools. These are the tools that you'll be utilizing to find entries and finding exits, and just having a generic overview of how to enter or how to trade boom and crash, right? Because from our research on the side, we realized that it's not a fundamentally driven instrument, but it's rather a more price action driven instrument. So the better you know how to, the better price action trader or the better analyst you are, the better chance you of winning or of being successful in this market. So that should be all from